Joining us live now from Citadel's Future of Global Markets Conference in downtown Manhattan, Avenue Capital co-founder and CEO Marc Lasry, alongside Bloomberg Open Interest co-host Dani Burger. Dani, take it away.
Katie, thank you so much. That's right. I am here with Avenue Capital's Marc Lasry. Marc, thank you so much for joining.
My pleasure.
First of all, congratulations. You've made the announcement. You closed your $1 billion sports investing fund. I think there's a lot of excitement around it. So now with this close in hand, what's the strategy of the fund? What are you using at the moment to identify opportunities?
Well, we have a pretty large team, but really what we're doing is just investing in sports. And the question is, do you want to do emerging leagues? Do you want to do women's sports? Do you want to do the big four? And we're trying to do a mixture of all of them. Things that we think over the next, sort of 5 years are going to double or triple.
You're far from alone, I should say. It feels like there's been just a spat of announcements recently. Apollo announced that they had a sports platform. Ares has been talking to investors about their sports fund. You already have the likes of CVC, Arctos already existing in sports. It's a small asset class comparative to the rest of private equity. Are we reaching a point of potential saturation?
Not even close. First of all, I've never heard of those groups, just so you know.
I'm sure our viewers have never heard of them either.
Never
heard of them.
All right. You've got to look at this. Everybody you mentioned, they're actually great firms, but the amount of capital that's in is actually very small relative to the amount of supply. So the market is $1 trillion market. It's this massive market, and you're talking about maybe $10 to $15 billion of capital that's been raised or that's looking to invest. So the opportunity set is huge. I mean, that's really what it is. And that's why you're finding more and more firms like ours and more private equity firms that want to come in, because you're literally in the first inning. And I think this is something that's going to last for a long time.
So what do you make of those who say the big four, especially now that you have PE in that market too, it's overvalued, it's frothy, it's bubbly? Is there any validity to those comments?
I think people have been saying that for the last 20 years. Like when I bought the Bucks, I paid $550 million. At the time, this was 12 years ago. At the time, believe it or not, we had paid the most for any team in the NBA. All right, 12 years later, the Lakers sell for $10 billion. So the Celtics sold for $6 billion. What you're seeing is that there's just the demand for live sports is the one thing that keeps on growing. So nobody records a basketball game or a football. Nobody records the Super Bowl and says, hey, let me watch the last 10 Super Bowls, right? So it's unique. It's different. That's why the value keeps going up, and I think that's the reason why it's going to keep going up.
Yeah, well, to your point, you've participated in the Big Four. You are currently, I know you also own the Orioles alongside my boss, Mike Bloomberg. But you're also very much so focused on emerging sports and women's sports. Just how much does the value proposition differ between the two?
Oh, I think it's where you can make fortunes of money. So if you sort of think about women's soccer, and WSL, 5-6 years ago, you could have bought a women's soccer team for around $1 to $2 million. Today, those teams, I think, are around $150 million. We've invested in a group called Mercury 13 in Europe, where we're investing in women's soccer teams. We've bought a few, and we're under contract to buy a few more. We're buying those teams around £5 million or 5 million euros, however you want to look at it. We think in the next 5-10 years, those teams are going to be worth anywhere between 25 million to 100 million. So where you can make sort of 5, 10, 20 times your money.
So for those who have been, and we won't name them, for those that are just concentrating on the Big Four leagues, do you think that that's a losing strategy?
No, not at all. I think they're going to do very well. I think what you've seen in the Big Four is that the returns have been somewhere around sort of 10 to 15%. I think that's a great return. I mean, it's not correlated. You're going to do exceptionally well. I don't think you're going to make 5 times your money, but I think what it is a safe return. And we're looking at investing in those. I think it's very safe. You're going to do well, but you're not going to have the huge growth that you would in something else.
Well, speaking of huge growth opportunities and changing sports, what about college sports? Is there any opportunity to get involved there?
I think that is one of the biggest opportunities out there. It really is. And, we've been close to getting a couple deals done. just hasn't gotten done. But I think over the course of the next 2 or 3 years, you're going to start seeing that there's going to be a number of private equity firms, hopefully we'll be the first, but that people are going to be doing this because of the NIL issue, because of all these other issues, schools need capital and they're going to need that money. And so the question is, did they take that capital from us or did they take it from their chemistry department?
How close have you gotten to reaching some of these deals? Might we expect any announcements from you anytime soon?
Oh, I would.
If you want to make an announcement here, we're also very happy for you too.
I could. I'd love to make an announcement, but I think I got to wait till we actually get it done. I think we are probably 3 to 6 months away, but the issue is always subject to board approval or the trustees. And I find that people don't like being first. They're always first to be second. They never want to be the first.
Marc, I'd be remiss if I let you go without asking about this wider moment we're in private equity. There's been this argument that the industry was overinvested in 2021, 2022. Now they're having a hard time finding exits, hard time with distributions. Fundraising has been difficult too. Do you think that this is an existential moment for the industry as a whole?
No, not at all. Look, I think what people forget is you're supposed to look at this over a 5 or 10 year horizon. If you're going to look at it over a yearly horizon, it's never going to make sense, right? So yes, is it harder to raise capital? Yes. So who's getting that capital? People who are making money, right? I think that's the big difference. Is it hard to sell? Yes, it is. Why? Because as a seller, you want the highest price, and as a buyer, you want the lowest price. And today, both sides feel they have the leverage. Sooner or later, somebody breaks. And the reason you've got this nervousness around the market and in the industry today is because nobody knows what's happening with the economy. Is the Fed lowering rates? Is the Fed going to stay where it is? Are we going into a recession? What's happening? So when you're nervous about what's going on, what do? You wait. You wait and see, and that's what's happening right now in our industry.